They say $100 doesn't buy what it used to, but in 2026, that phrase just took on a whole new and much scarier meaning. Whether we're talking about the price of a barrel of oil, the looming six-figure psychological wall for Bitcoin, or the rapidly shrinking window to hedge your portfolio against a Middle East-driven energy spike, the $100 window is officially closing. If you're waiting for the right time to move your cash out of a melting savings account and into assets that actually move, you might have days, not months. Today, we're breaking down the 3 specific $100 barriers that are about to change the economy and exactly what you need to do before they break. First, let's talk about the elephant in the room: oil. As of this week, WTI crude has officially retaken the $100 mark. Now, why does that matter to you if you don't even drive a gas guzzler? Because $100 oil is the tipping point for global inflation. When energy costs this much, everything from your grocery delivery to the plastic in your iPhone gets more expensive. The IMF is already sounding the alarm that if oil stays above $100, the soft landing everyone promised for 2026 is officially canceled. Look at energy sector ETFs, or companies with high pricing power. When the cost of doing business goes up, only the giants can pass those costs to the consumer without breaking. If you're sitting on 100% tech, you're exposed. It's time to diversify into commodities before the $100 floor becomes the new $120. Now, let's pivot to the other $100. Well, $100,000. Bitcoin is currently caught in a tug of war. On one side, we have geopolitical risk-off selling. On the other, we have macroeconomists like Henrik Zeberg predicting a rally to 110K or even 120K by the end of this month. Analysts are calling this the final discount. Once Bitcoin stays above $100,000 for more than a weekly close, the retail FOMO, fear of missing out, will kick in. That $100 you were going to invest, it will buy significantly less sats once the six-figure barrier is broken. You don't need $100,000 to play, but if you've been waiting for a crash back to 2024 levels, you might be waiting for a ship that's already sailed. Consider a staggered entry. Put that $100 to work in small increments now, rather than chasing the pump at 105K. Finally, there's the $100 in your pocket. In March 2026, $100 has the purchasing power that roughly $80 had just a few years ago. If your money is sitting in a standard checking account earning 0.01%, you aren't saving, you're losing. The window to lock in high-yield returns is closing because the Fed is playing a dangerous game with interest rates. If you aren't getting at least 4.5 to 5% right now, move your money today. With the current volatility, parking your cash in 3-month government bonds is the smartest way to keep your $100 from shrinking while you wait for a market dip. Here is your Act Now checklist. 1. Check your energy exposure. Is your portfolio prepared for $100 plus oil? 2. Bitcoin positioning. If you believe in the 100K breakthrough, the time to accumulate is during these war scare dips, not during the rally. 3. Inflation-proof your cash. Don't let your dry powder lose value. Get it into a high-yield vehicle immediately. The $100 window isn't just a number, it's a shift in the global economy. Those who act while the price is still double digits for oil or 5 digits for Bitcoin are the ones who will come out ahead by the end of 2026. If you want me to pull a deep dive comparison on the best high-yield savings accounts available this month, just drop a comment below or ask. See you in the next one.